Hello.
Hello, we're
Welcome
back.
back. We're back. Episode numero dos. Peace,
We're
peace.
we're rolling. We're rolling now.
We
We're
are.
official podcasters.
We are official. Once you get past one episode, it's official business here.
Right.
Very serious
Absolutely.
business. Hey everyone, I'm Ann McCabe. I am the CEO and a partner here at Curo Private Wealth, and I'm joined by my esteemed partner, Teresa.
Hi. Good morning. I'm Teresa Roberts, COO and partner here at Curo. Proud to be working with Ann and happy to be here with you.
Yes, we're so happy that you have joined us. So, today we are going to talk about a common question that we get, which is when does it make sense to pay an advisor to manage your investments? And does it really make sense to pay someone to manage your investments? Now, before we get into that conversation, obviously, we are both financial advisors. We run a financial advisory business. So, take all of what we say with a grain of salt. We are incredibly biased, but I think we're trying to bring some things to think about to the table and certainly admit when it may not make sense to hire an advisor. So hopefully you will find our commentary as objective as possible on the topic. But before we get into that, we're going to do a little A-team catch up because it's been
Yeah,
a while since we've caught up.
absolutely.
So
I think you go
Teresa,
first. I think you go first this week.
I go first.
You go first
Okay.
this week. Tell me what's going on with you.
Oh my gosh. I've been blowing money. That's what's going on with me. I think
Welcome
I'm
to
gonna
Chloe.
do, yeah. I think I'm gonna do, what are we in April? I think I'm gonna do an April spending freeze. I usually just do that in January after
Right.
coming off the holidays. But I don't know if you do this, but after every trip, I always do like a final accounting of how much money I spent on a trip because I like to know. I like to know how much we spend on flights and lodging and food while we're there and activities. Do you do the same, or am I just
I
weird
do
in the sense
not.
that I
So I am of the opinion that that is no longer any of my concern. That was what past Teresa did, and it's not any of present Teresa's business. No, I'm absolutely kidding. Yes, I do like to do an accounting of what the trip cost and also just compare that with the experience. And it kind of
Yes.
sets the tone for maybe my next planning, sort of what dollar range gets me the experience I'm looking for. So yeah, I do the same thing.
Yeah. Okay. Well, good to know. And I think it's also value. Like we'll be talking a lot about value today, but I
Mm,
think it too, like I've had the experience where we've gone to a resort that had a good reputation and it was nice, but when I ran the final numbers, I was like, "Ooh, that was a
right.
resort in Virginia. Like we could have been somewhere exotic for that amount of money, right?"
Right.
So I think it also helps you decide the value that you're getting for the money that you spent. And also it also helps when you're having conversations with our clients, and if they're planning to do a similar trip, you can share your experience of, how much roughly they should be budgeting or thinking about spending if they're planning to do a similar sort of trip. So
Right.
anyway, I did the final accounting for Disney. It was not pretty. Kids had a great time and it was a memorable trip. But between that and then our hot water heater
Uh,
busted, yeah, it's just been one of those months. So
yeah.
this household is going on a spending freeze.
Well,
So
I'm
that's what's
so
going on
happy
in
to
my
hear
life.
that Disney was a fun time. I mean, you spent a lot, but I'm sure it's something that, your boys will remember forever, which makes it worth it, right? When we talk about value. But I am definitely sorry about the hot water heater. I've been there before. It's no bueno.
No, it's no bueno. And thankfully I didn't actually have to shower in cold water. I went
Right.
to the gym. My partner did, and my 12-year-old was actually, I got home from, we went to my brother's house one night to shower, and I got home, and my 12-year-old was like, "It was amazing, Mom. My body
Oh, he
feels
liked
so
it.
great." He loved it. I'm like, "You are crazy." But people do those cold plunges,
Yeah.
so I guess there's something to it. Yeah, he said his
Yeah.
muscles felt, rejuvenated. I'm like, "You're 12. How do your muscles
Right.
normally feel?"
He's an athlete. He's working hard. He needs to rejuvenate too.
Yeah. So anyway, we have hot water again, thankfully. But yeah,
Yeah.
no more spending money for a
Yeah.
while.
Got it.
So that's what's going on in my life. How about you?
Um, more of the same of my, stuff. I actually know I do have a different update. I was actually able to go home this past weekend. So from Savannah, Georgia, and was able to get back. Now I was there for maybe 72 hours. So it wasn't a long trip, but it was nice to get back home. I hadn't been in Savannah since last year. So it's nice to see my family, see my friends, lots of my sorority sisters that I grew up with many of them I know from high school, even though we pledged in college. So it was a really good time. It was hot. I mean, I was not expecting how hot it was in Savannah, like 90 degrees already in April. So that
Wow.
was jarring. uh,
Yeah.
but good to see my grandmother and family and friends. So that was a nice little break from my normal routine. And now just getting back at it. Things are quieting down a little bit on the business front since the end of tax season,
Oh my
thankfully.
gosh. Hallelujah. We made it. We made it
We
through
made it.
tax season.
Right. So, but I'm doing well, plugging forward, excited for the warm weather and trips on the horizon. So hopefully it's a good summer.
Awesome. Yeah, I'm looking forward to the summer as well. But yeah, I feel for people, I'm from Georgia also, and I forget how incredibly hot it is even this early in the
Me
season. So
too.
I think about, July and August just unbearably hot and humid. It's like you take a shower and you walk outside and you're sweating again. Like, what's the point?
Right. Right. I tell people I'm from Savannah. They're like, "Oh, it's so beautiful there." I'm like, "Yeah, just don't go in July and August. Don't
Exactly.
don't visit in July and August. You'll be miserable."
Yeah, exactly. So let's get into our topic for today. So, as we kicked off by saying, one of the most common questions that we get
Mhm.
from folks, especially if they're already do it yourself investors, so they've been managing their portfolios for a while and, they may be doing okay. So, the question is like, why should I pay someone to manage my investments? And I think at the end of the day, there is a segment of the population, I don't know, 25, 30%, if I had to put a number on it, that are do it yourself investors and that will probably always be do it yourself investors, which is fine. If that's
Right.
working for you and you're doing well and you're not making any big mistakes and you're not selling out when the markets go down and making detrimental decisions for your long term financial success, then like you do you, right? There's no necessarily right or wrong answer here. But one of the things when we get that question that we like to say, and this really does speak to should you be a do it yourself or should you outsource to a professional advisor, is if you have what I call the three E's. So you've got the experience, the expertise, and the education around managing investments. You've got the time, and that's like
Right.
probably key for most of our clients. Like nobody has
Absolutely.
the time. And then lastly, if it brings you joy. And I think the joy component is something that maybe people don't check in with themselves enough. And I think this question works for anything that you're considering outsourcing, right? Like, I don't clean my house because it does not bring me any joy.
Dishes do not spark joy.
No, they really don't. So, and I don't want to spend like the little amount of precious time that I have cleaning my house. You could say the same thing about changing the oil in your car. Now you have an EV, so you don't have to deal with that.
Yes.
But before, did you ever change the oil in your car?
Absolutely not.
No, no, no,
No.
exactly.
I mean, I think even with anything, right? I could polish my own nails. I prefer to go see a nail tech at a salon every 3 weeks, right? The same thing with hair. I could do my own hair. I don't want to. I'll pay someone else to do it. One, because they're going to do it better than I would. Two, because I don't have the time to sit, and spend the 2 hours it's going to take me to do it when I could go to have someone do it in 45 minutes. So I think, like you said, anything that you could outsource, sometimes it makes sense if there's that value piece, right? If it somehow benefits and makes life easier for you a little bit.
Yeah, if it adds value and you can afford it, right? Because
And you can
obviously you
afford
have
it.
to, yeah,
Absolutely.
you have to make sure that it works in your financial plan and, with your income and things like that. But if you can afford it, then for sure, I think it makes all the sense to outsource those things that you don't have time for. You maybe don't have the expertise and they don't bring you joy.
Yeah.
So one of the things we wanted to share is Vanguard, which I think it's kind of hilarious that Vanguard does this study, but because they're the do-it-yourself
It's
king,
right.
right? So they do this study called Advisors Alpha, and what they have tried to do is to quantify the value that a professional advisor who follows certain best practices can bring to your life. And we're going to share this chart here up on the screen, but I think it's really interesting if you look at the different components of what professional advisors do for you and the value that they add. And so you've got things like being sensitive to fees, right? Making sure you're not in all very expensive, professionally managed mutual funds. You've got things like rebalancing. These are all really important. But if you look at the most value add on the chart, which this is not surprising to either one of us, It's
Right.
the behavioral coaching piece, right? It's when things are going crazy in the markets and you're losing money on paper and you're like, oh my gosh, what do I do? Maybe I should sell and go to cash and just wait it out until things feel better in the markets, right? I mean, how many conversations have you had, Teresa, with clients like that?
Countless. And I mean, even thinking back to 2020 during that COVID correction, the numbers of conversations of talking people, what I call off the ledge,
Yes.
of if it was time to go to cash at that point.
Yeah, exactly. And these are really, it may sound a little dramatic, but I truly believe that these are detrimental decisions, right? Like it
Absolutely.
makes a huge difference because if you've seen all the charts, right? If you miss out on the 10 best days, I mean, it can
Hmm.
cut your returns in half. So it is really, really important. And it just takes a conversation with someone who, like us, who's looking at the data and who's been through market declines many times in our careers to zoom out, give some context, give some perspective. Obviously, we don't have a crystal ball, but we rely heavily on data and on historical information so that we can share, like, hey, last time we were in a similar situation, this is what happened. Not that we're guaranteeing it's going to happen exactly the same way this time, but I think just having that calm conversation and what we always call like emotional centeredness when things are going on, going crazy around us, I think is super important. So, the other thing, which is huge, we talk with clients all the time about this, is what Vanguard is calling spending strategy. But that's basically like, okay, you've been in your accumulation phase of your life. Now you're going to retire. We call that the distribution phase. That is actually, I hate to break it to you, more complicated than the accumulation phase because you've done a great job of saving. You've got your 401k or TSP, you've got maybe a Roth IRA, you've got a non retirement account, you've got Social Security. When do you take that? It's like figuring out how do you recreate that paycheck for yourself in retirement in the most tax efficient manner is a huge question where we can add a lot of value. So that is also on the chart, and I think that's spot on.
Yeah, absolutely agree. And working with clients, I work with, especially in our current situation, work with a lot of clients who are in that distribution phase. And like you mentioned, it's a lot more complicated than people realize because again, we're not CPAs, we don't give tax advice per se, but we still want to help our clients manage that distribution as tax efficiently as possible. And I think many times people don't consider putting together that how do I spend it down, right? I built it up. Now, how do I efficiently spend it down? One, so that I don't send myself a huge tax bill every year, but also that I don't outlive the money because I'm spending too fast or spending in the wrong order or taking taxable money before I should. And so it's a big part of the planning that we do and the advice that we give as advisors.
Yeah, absolutely. And I also think the thing that people maybe don't realize before they go into that distribution phase is you may want to change your strategy year by year. So
Right,
depending upon what's going on in the rest of your life and in your tax position, maybe one year you do want to take more money out of that pre-tax
right.
401k versus the next year you want to take out of Roth IRA. And all of these distribution decisions can impact things like your Medicare premium. So there's so many components to consider. And it's not like, okay, I'm 65 now, I just retired. This is the way I'm going to distribute and create a paycheck for myself for the rest of my life. It's going to
Right.
change, right? And so I think that too is where an advisor coming in and helping you decide on a yearly basis what makes the most sense, knowing your entire financial position is hugely valuable.
Yeah, and the range of our knowledge. And I mean, especially for both of us, we're both certified financial planners who have done the education around different areas of planning and having your sort of arms around all of the pieces. You mentioned the effect things can have on Medicare. And those are sometimes the small things that your average retail investor may not consider when they're making investment decisions in their life. So especially if you're paying qualified advisors, they have their arm we have our arms around a lot bigger picture and how one decision plays into the next and can help guide you through that decision making process.
Yeah, exactly. So that reminds me, one of the things when we're having this conversation around fees that we ask clients to consider is, do you think we could save you? Let's just say we're charging 1% on average, right, to manage someone's
Hmm.
portfolio. could we save you 1% a year on potential mistakes that you may make, right? That could be very costly and could be
Right.
much higher than 1% of your portfolio. I think the most obvious question is, can we earn 1% extra per year for you in your portfolio? Is it likely, again, not that we're guaranteeing anything, but is it likely that that could be a scenario because we have the expertise, because we're watching the markets, because we're doing a lot of research? And then, back to the value and the worry question, can we add 1% of value to your life by you just outsourcing it, not having to worry about it, and knowing that it's being done properly? So these are some of the questions to kind of noodle if you're in this situation, considering potentially hiring an advisor.
Absolutely. And I think also too, it's probably worth noting the way fees are charged by advisors and what that means for both us and you. And I mean, personally, Ann and our firm, we are what the industry calls fee-based advisors, which means that for our traditional average clients, we are being paid based on some percentage, as I mentioned, 1% of the assets that we manage for them. But then what that also does is means that as your advisor, we also benefit by seeing your assets grow. So it's not that traditional broker style commission based business, which some businesses do. And Ann and I both are licensed to do that kind of business as well. But we're not trying to pitch products, right? Most advisors these days are not trying to sell you on products to push out commissions on any weekly or monthly basis. We make more money when our clients make more money, right? If we're charging 1% of your assets, we're motivated to see those assets grow for you. So I think lots of times people hear the word fee and there's a negative connotation around it and thinking that they're somehow being taken advantage of or being charged too much. But I think it's always important to note that we only get paid when you do. If the market's down and your assets are down, then so is the money that we make, right? And keeping us on the same side of the table, I think, also builds that trust in the relationship that we're always going to make a decision that's better for you than it is for, we're always putting our client first in that way because we only win and grow when our clients win and grow.
Yeah, no, that's a great point. And I remember sitting down with a prospective client years ago, and he was with one of the large brokerage firms. And he said he felt like every time his advisor called him to make a trade or make a change, he just needed to buy like a new pair of shoes. He was very transactional. And he was like,
Right.
I literally feel like he's just trying to generate commission. And I was like, well, you may not be wrong about that. I don't know. I don't know who this person is, but you may be onto something there. So yeah, and in this kind of relationship, we are what's called fiduciaries, which means that we have a legal obligation to give our clients advice that is in their best interest, not in our best interest as a Teresa and Ann or our firm or our back office, but in their best interest. And I think having that understanding, we would give you the best advice possible anyway, but it's also nice to
Right.
know that there's that, foundation and that legal obligation there as well.
Right, absolutely. I mean, Ann and I are good people, and I think in general just want to do what's best for not just our clients, but for the world in general. But we are so bound by legal requirements and obligations to be good to our clients as well.
Yeah, exactly. So just looping back to the Vanguard study, what they
Mhm.
basically have done when they add up all the value that working with an advisor who follows best practices can add to your life, they're saying somewhere 3% or more. And I think they're being pretty conservative here, because of some of the ranges that they list. But I think that's pretty impactful to consider that, yes, you're paying 1% to have somebody professionally manage your investments, but if they're adding 3% of value, that is a good deal. And so we always say price is only an issue in the absence of value. It's
Right.
what we were talking about with the vacations. It's the
Mhm.
case in really anything that we consider in our lives. Price is only an issue in the absence of value. So I think at the end of the day, if this value is being added to our clients' lives, which we at Curo are very committed to doing, we want all of our clients to feel like they are getting the best deal ever,
Right.
right? That we are adding so much more value to their lives than what they are paying. And so I think if that's the case, then working with an advisor, to your point, Teresa, who you trust and who has the expertise and the designations and the experience, then it probably makes sense to outsource and have somebody take care of it.
Yeah. And again, I think we don't want to diminish either your original point. Is this something you enjoy doing? Does it spark joy? Most people can do a lot of things that they necessarily don't want to do. And again, if you're into investing and you like following the markets and you like doing it yourself, that obviously it makes sense for you to do it to a certain point. But just doing it because you want to avoid paying a person doesn't mean it's something you enjoy doing or something you can even be good at doing. And I think the other point too is not to overestimate your level of education. Because I always joke that the internet makes you believe you can do anything, right? I mean, the internet could convince you that you could fly a rocket ship. And 9 times out of 10, most people don't drive cars successfully, right? So you don't also want to overestimate your ability, right? To be able to do it and to do it well and to do it well over the long term through different market cycles, right? What's the old saying? All ships rise in rising tide. So it's good
Mm-hmm.
to do it right when the market's soaring, right? What I think sometimes where you find more value is when things are a little more bleak and you have a
Yes.
professional who can step in and help guide you through those times in the market as well.
Yeah. The other saying is when the tide goes out, you can see who's swimming without a bathing suit. It's the flip side of that saying.
The
So
flip side of it, right?
yes, yeah. Well, I think that's a great place for us to end. We hope this conversation has been educational and interesting. Thank you again for tuning in. Please do check us out at curoprivatewealth.com. We've got a blog and try to make our website really filled with lots of interesting information. If you're watching us on YouTube, please subscribe to our YouTube channel. And if you're listening to us on your favorite podcast platform, please subscribe as well so that you can be alerted when we drop new episodes. So thanks again for tuning in. We will see you again very soon and take care.
Take care.